Hello everyone, welcome to XM Live here at the beginner's room. This hour is about the COT report insight, and this time the COT report insights are really new news. Why normally the COT report is published on Friday evening, but because of June 10th that we had last week, the COT report was published just yesterday after market close. So I was awake until 1 o'clock in the night just for you in order to prepare the whole COT report, and I can share it with you now. I would like to welcome all the viewers here. Of course, if you have any questions, you can write me in the chat on XM Live, and I will try to answer you everything. Those who are watching us from YouTube, welcome to XM Live. XM Live is a service where we stream on 3 different channels, 8 hours every single day, and I see William is there already. And in the first 15 minutes today, we are showing you what we are doing on XM Live every single day, also on YouTube. But after 15 minutes, we will ask you to come to XM Live, which is absolutely free. You have a link below the video. You can join us, and again, you can get content that normally you have to pay a lot of money to receive this kind of content. So feel free to join us. So with no further ado, let's start this session. What do you expect? I will in the next 10 minutes, I will explain you what is the COT report. And then I will show you how I analyze the markets, and hopefully we will open also a couple of trades. I have an amazing year this year so far, and the reason that I have a good year is because the COT report is so an important part of my trading, and I know many of those who are watching here know that, and therefore come every single week to see what kind of signals do we get from the COT report. So let's start. Again, the first 10-15 minutes is a theoretical part, and then we look practically on the opportunities that we are having for this week. So when I start to analyze the markets, I analyze the markets on 3 different levels. The first level is the fundamental level. It's the level where I look at the economy and at the geopolitics, and I look what is happening, what are the big, the big drivers of the markets. And so, for example, we had, I don't know really this morning, but we have a war between Israel and Iran, which the US over the weekend joined half with one attack. It seems like there is now a ceasefire. What does it mean for the markets? Look, markets also in the Middle East are very bullish. So I think this war will not have, first and foremost, it will not go very long period of time. And second of all, the markets are not worried that it has worldwide effects. The biggest threat, I would say, is that Iran will close the Strait of Hormuz, which is in the Persian Gulf. There is like this strait in the sea, and if Iran closes this strait, 20% of all oil production goes through this place. Again, this is in the Persian Bay, Gulf, and if the oil can't go out, this will create huge disruptions in the energy markets, and this will probably, if they would close it, this would probably lead to a broader war where the US and England and everybody will join the war, and then it can become very dangerous. So first and foremost, I don't believe they will do it, and second, if they do it, it will have huge implications. But if not, I think the damage on the markets are limited. So that's geopolitical. Another theme, geopolitical, I would say, at the moment is still the diversification away from the US dollar. With the tariffs, or with the introduction of the tariffs by the US government, the world started to realize that they can't rely so much on the friendship on the US anymore. And the US is ready to use its dollar, its currency, as a weapon. And therefore, countries decided to diversify away from the US dollar. And I think this trend will continue. So we see China is buying a lot of gold, and now they start to buy a lot of other precious metals just to diversify its reverse away from the US dollar. And I think this is a trend we will see, we will continue to see. So in general, I believe this is bearish for the US dollar. That means bullish for precious metal, bullish for other currencies, bullish also for the stock market. This is my fundamental view. Again, this fundamental view, I'm not trading on it. You have to understand this. I'm not trading on it, but it gives me a general view of how markets work at the moment. After I found, and by the way, this is also not a recommendation that you should do to see the markets exactly like I do. On the second level of my analysis, I analyze the market not on geopolitical and on the economy, but I analyze it on the reaction of market participants of what is happening in geopolitics. And I think this is the most important analysis. So looking at the market participants and their behavior. And the COT report does exactly that. And again, I will show you what the COT report really shows me. But this is, it doesn't matter to me. It matters to me a war. Of course, I would like that there is no war. But the point is, as a trader, I want to know how the market reacts on it. You know, sometimes you could get very good news, but the market's reaction is very negative. And that can have many reasons why it's negative. Maybe they thought that it's even more good news than it was. Maybe they're afraid of what happens next, that the news in the future will be less good. And so markets react sometimes, you know, not based on the good data that you're having. It reacts on other things. And this reaction, I want to analyze this reaction, and this is actually what I want to trade. Now, also the fundamental analysis and also the COT report with the sentimental analysis, they're both not a good timing tool. So even if I say, you know, again, let's say I'm bearish on the US dollar, so I'm bullish on euro. Does it mean the euro goes up today? Today it goes up, but like it doesn't say anything what happens today. And so why? Because these long-term views and also the COT report, it's longer term. It's not what happens today. And so because they're not a good timing tool, I need a timing tool to find the right time to enter. And my timing tool is the technical analysis. So the important point that I want to make here is that the technical analysis is for me, for my trading strategy and how I approach the markets. Technical analysis is solely a timing tool. It's not a tool to go long or short. That's done by other kind of analysis, fundamental and sentimental. But the technical analysis helps me to find the right entry at the right time. That's it. So let's talk now about the COT report, which is so a crucial part of my analysis, the sentimental analysis. The COT reports stands for commitments of traders. So when I bring in my pen tool, let me just move here things around so I can start to write. Commitment of traders, that's COT. And it shows me how traders are committed to the markets. That's what the COT report. It's released normally on Friday evening. And sometimes on Monday evening. This week was on Monday evening because we had on Thursday, June 10th, the government wasn't working and therefore the report was not ready on Friday evening. So we got it yesterday evening. The COT report is published by the CFTC. By the way, this is a screenshot of the website. So if you search COT report, the first result on Google will bring you to this website. And the CFTC is the Commodity Future Trading Commission, and they release the report. Again, once every week, everybody can freely download the data and analyze it. So there are a couple of reports that you can download. The first report is the legacy report. Legacy report. And the legacy report is also called the old report. And in the legacy report, we are having 3 types of traders. What is happening? Okay, here. We have 3 types of traders. We have first the commercials, we have the non-reportables, and we have the non-commercials. Additionally, we have the open interest. The open interest is something like the volume, okay? It shows how many contracts are open, and it tells me something, if there is more interest if there is no interest, why should I trade it, right? If nobody is going and buys anything and it's very illiquid, I shouldn't trade it. So the open interest tells me about how much interest there is. Then we have the non-reportable, which is a group. So maybe I have to explain that as well. Why do we get the COT report? Why is it downloadable for free for everybody? Because in the past, and I speak here about the 60s and 50s and 70s, big market participants, like for example, Morgan Stanley, they could manipulate the future markets. They could push the price up or push the price down. And manipulation is never good for financial markets. We want to have an effective market, not a manipulated market, because we want to see the price is the effective price of the markets and not for somebody pushing around the price. So the CFTC introduced the COT report in order to reduce manipulation in the market. They don't want manipulation in the market. So the non-reportable are those people that from the beginning, they never can push prices around in the market. They're not big enough. Okay? And so the non-reportable are all kind of small speculators. They want to make money. They are in the markets because they want to make money, but they are small. Now, what is special about them? This is a huge group of different people from all around the world. They all trade with small money. What is special on them? That they trade emotionally as a group. Like there are single traders in there that are extremely successful. But as a group, as a whole group, they are emotional traders. What does it mean? It means, if they go long or short, it depends how they wake up. So if they wake up in a good mood, they go long. If they wake up in a bad mood, they go short, right? It doesn't have to do anything with the markets. It's just about their mood. If they become, as a group, very bullish, most of the time, this is a contrarian indicator. Then you should go into the other direction. Okay, if they become very bearish, also, then you should go into the other direction. The non-commercials are big speculators. So big speculators, they think like us, the small speculators, but they're not emotional. They're professional. Now, the big speculators, they could manipulate the markets. For this, the COT report is created, so they can't do it. They are here, they have to report every single of their trades. They have to say, today I went 500 lots long in gold. Okay, they have to fill out paperwork. Big speculative money. They want to make money. They have a lot of money. They push around. They move around a lot of money. They get strong opinions. And normally, what we can see with the big speculators, we can recognize real trends.